Welcome back, guys. And we are actually going to look at one of the most important parts of this course, and it is your psychology. Before we go into the psychology, we're going to actually cover something called the risk management and then go to psychology. So, risk management is part of the psychology, it's the number one rule for survival. So, risk management, like I said before, it's when you put in a trade and risk is what you risk with your stop loss, and take profit is what you get. And this little risk to reward is your risk to reward. So, this module, this part of this course is what separates amateurs from actual profiting traders. Now, I want to tell a story here. I have over 115, I think 115 or 118 students I mentored in the last 5 years. And out of all of them are actually making money in some way. Most of them, actually, 90% of them, are they're working in financial markets or anything like that. But in terms of trading fully, CFD and everything like that, I think less than 50%, I think close to 40 to 50% of them are consistently profiting. The rest are still struggling. And when I mentor them, I can see that the techniques that the students who are profiting, the, the students who are not profiting are still using the same techniques. They have the perfect analysis. But for some reason, they are not profiting. And when I dig deep, it's because they don't have the psychology straight. The students who are profiting, they have great analysis, but they got great self-control. The students who are not profiting, they have great analysis, but they don't have self-control. So I did put them in the path of buying spot because they have great analysis. They bought Bitcoin recently when it went down 80 grand because they knew it's going to go up to 110, and they buy more in the dips. This because the analysis is so great, they can make money in spot. But when it comes to trading CFDs or futures and things like that, they suck at it because the psychology is so bad and they make really bad decisions. They so big buying something and then buying something like Bitcoin, which they cannot like short. They just have to hold it, and then if it goes less, then they just wait until the bumping point that it goes back up. So they are in profit at all times. But they can't do futures with it because the psychology is not right. So this part is actually what separates and makes you profitable. So you could have any strategy in the world, something very simple. You could have something very simple like a trend breaking, and then you can enter here and still make profits or something like that. But if your psychology is not right, if that is not right, you're still gonna lose. So the first rule is the 1% rule. Text in here, 1% rule. This rule means that you will never risk more than 1% of your total account balance. So let's say you have $1,000 in your account, or let's say you have $1,000 that you're going to put aside for trading. The most you can lose on one trade is going to be $10. This mathematically ensures you can withstand a losing streak and you can stay in the game longer. If you go $10, if you fail 10 trades, it's still only $100, right? So you can actually fail how many times? I think 100 times. See the difference? You have to fail 100 times. If you put $100 per trade, you're gonna burn out your money in 10 trades. So when you're getting started, especially, you need to stick to this 1% rule. And the next thing is the risk to reward ratio. We only take trades that have a positive mathematical expectancy. This is called the risk to reward ratio, what I told about earlier in here. Now, before entering any trade, you must ensure your potential profit is at least twice your potential loss. We call this the 1 to 2 risk to reward ratio. If you can get more, that's good. So which means whenever you enter to a trade, you need to have a good idea where you're going to keep your stop loss and where you're going to get your profit. And once you enter the trade, you cannot change your stop loss. Many people, they are hopeful about their losses, but they're hopeless about their profits. When the market goes to this level, they're going to get out. But then the market goes to this level, they're going to keep increasing their stop loss. So by the end of 100 trades, they got so many trades like this, and they're in an overall loss. So you need to have small stop losses and big profits. So before entering a trade, just make sure you got the proper risk to reward ratio at all times. So you know now which tools you need to use. You can use this tool, you can use this tool, or if you just want to use a ruler, you can use a ruler and get the pips and figure out where and how much you are actually losing in a trade. And now let's go into your worst enemies. Your worst enemies when it comes to trading is your first main enemy is fear, and the other enemy is greed, and the other enemy is FOMO. What is FOMO? Fear of missing out. Many people lose money because of this. The real battle in trading is not against the market, it's against yourself. So we're going to discuss the three main account destroyers. First one is fear. Fear causes you to exit winning trades too early or not take a valid setup. Now, this happens if you don't follow my previous rule about the 1% rule. When you are only risking 1% of your trade, you don't care about losing, right? It's just 1%. But when you're putting more, sometimes it's not good. And the other thing is, if you have a trade plan, stick with it. Don't change it. If you had a plan, if you had a solid plan, stick with it. And then if you keep changing, then have a plan that you can work with. You know how I said, ride the moving averages. Use my doubling techniques or many techniques that I was teaching my other course to figure out a way to move stop losses. So you can keep riding the profits, but there's always a starting point where you're going to start to move the stop losses because you can't lose your entry point, right? So create a proper strategy with proper rules. And the next thing is greed. Greed makes you break your rules by taking too much risk or taking too much profit. Now, if you said you're going to get out in here at this high, if you said you're going to get out at this high, get out at this high. Don't wait until this low. That is greed. This is your trade plan. You got 2.66 risk to reward. Keep going. Just cut off, right? And then the other thing is greed is taking too much risk. You know, you're like, oh, this trade is gonna work. This trade is gonna work. It's let's say for example, this trade you think, oh, it's gonna retest. This is gonna work. This is gonna work. It is gonna go to this position, and you're thinking this is retest and it'll go, and you're taking a risk of usually risking $10. Now you're risking $100 because you're 1,000% sure, and everything looks like the market is going to go down. So let me show you. When it's right in here, the market looks so good. It looks like, it's all in downtrend. I'm going to profit. And you can see just stuck with this, and you're like, yes, this is going to go to 100%. And I'm going to make so much money with this. And boom, you're not going to make money because you were greedy and you're going to lose so much money. You're going to lose 10 times of what you did. So if you have a trade plan, stick to it. And the third thing is FOMO, fear of missing out. So fear of missing out causes you to chase trades that have already left without you. One of the biggest rookie mistakes. So many, they just enter before their confirmation is here because they're fearful that they'll miss it. Or you chase trades that are already gone. Like for example, you're in here. The same example I took earlier, you're in here. You couldn't enter here because you were scared. You had the first issue, which is fear. And you didn't enter here, fear. And then you didn't enter here, and now you are fear of missing out. You don't want to miss out. So before anything happens, you just take a trade in here, hoping you can ride the rest of the market, and boom, it retested and came back to 50%, took you off. So you need to have a strategy, you need to have a time, which we will actually speak about later on. And the power of the trading journal is the other thing. The single most powerful tool for improvement is a trading journal, and this is non-negotiable. So at the end of every trading day, you will log your trades. You could do it at the end of the trading day. You could do as you trade. Depends on your style. And I'll try to give you a simple template in my school community as we go. I'll try to set it up in Notion. So your entry, your exit, your risk to reward, put everything, most importantly, your emotional state during the trade. This is how you find and fix your own mistakes. Now, the trading journal, like I said, put in your strategy at the top. Put in exactly what strategy you're going to do, and then make your trading journal according to that strategy, and then journal every single part of it. And the reason I'm telling you this is when you look back in journaling is actually not enough. You need to look back to it at the end of the day. You need to look back through your trades and figure out which places you had fear, which places you had greed, and which places you had FOMO. So you need to figure out the root problem, why this occurred, and you need to put a solution for your strategy. You need to be robotic with these trades. You can't have emotions playing games with you. So you need to have a really strong strategy on what you're going to do next, what you're going to do next, what you're going to do next. So that's that. And so far, we've covered most of it. So putting it all together, let's build your first plan, the anatomy of a trade. So let's put everything together now. And then every trade has three components. The entry, this is the exact price where our rules tell us to get into the market. And the stop loss, these are predefined exit points. If the trade goes against us, it's our safety net. We play at a logical level where our trade idea will be proven wrong, and I'll give you more techniques on stop losses later on. We could do like 24 hours lesson for stop losses itself, and the take profit. You know what that is, where you take your profits. So those are what you need when you're just initially getting and putting everything together, and then simple step-by-step trading strategy. So I'm going to give you your first complete mechanical strategy to practice. So what you can do is go to the 4-hour chart and check if the price is trading above the 50 EMA. If yes, we're looking for buys only. If it's not, we're looking for sales only, and price wait for the price to retest with the EMAs. And what you do is you go to the chart and then try to like play around. You just open TradingView and then have the EMAs, have different trend line techniques, everything that you learned, just back test it. If you don't have replay button, just back test anything you can have and then go with it. So try to have EMA retest trades, just learn, just put everything you learned, look with your eyes, and then try to, if you want, you can do this method. You can hide from the right corner, and then if you think there's gonna be a buy in here, you can put it like that. That way you can work it out if you don't have the paid version with the replay option. And then enter the trade, place your stop losses, and then write down strategies. Write down what strategies works best for you, and then set your take profit, and then the next at the clear resistance levels and the support levels as you go, then have a proper risk to reward ratio. And then in the next few videos now, what I've done so far is that we've covered everything you need to know, the basics. We've covered all the basics from the bottom all the way up onto the psychology. You got information to get started, but we need more information to become the best, right? So what I'm going to do is I'm going to have more videos in all these sections that we covered, but we're going to deep dive with more examples and with more stuff. These videos are going to go up very soon, but the deep dives are going to be done throughout as we go. And then we got my school community, which I'm going to be doing weekly calls in. And then in my school community, I'm planning to have a separate course, and that's the paid course where I'm going to put all my mathematical techniques, the angles and everything like that, which I've already said many times. So I'm going to have all of that information there. Come join my community so that way you can actually trade with me, be there on my live calls and ask questions and things like that. But what I'm trying to do here right now on this YouTube channel, and if you're watching this through school, you can find this course in YouTube as well for free. So my goal is to have as many free content out there for you to get started and for you to be profitable, even without my techniques. So my techniques are actually beyond becoming profitable. It's about becoming a master at analyzing a chart, any types of chart. So that's our goal. So let's try our best. I'll try my best to put as many videos as I can. But so far, I think we've covered everything, the basic of the basics for you to get started, for you to have a quick understanding about what trading is, how to read the market, and indicators, and a few of my techniques as well, the basic techniques which you can actually make new strategies with. Good luck.